Hey everyone, and welcome back to the Better Podcast, where we break down the ideas, strategies, and real world decisions behind thoughtful real estate investing in the Triangle. Over the past several episodes, we've spent a lot of time talking about how we think about better. We've talked about buy right development, the importance of hyperlocal market knowledge, how we evaluate risk, and the frameworks we use to make investment decisions. But one of the questions we often get is, what does that actually look like on a real project? That's exactly what our summer series is all about. Over the next several episodes, we're going to take you behind the scenes of actual projects in our pipeline and walk through the decisions that shaped each opportunity. The goal for this series is to show how Better evaluates opportunities before we purchase, explain the strategic decisions behind our development approach, demonstrate how we think about risk, returns, and investor alignment. It's not simply to show you the final project. We want to walk you through the entire decision making process, being fully transparent. Why did we pursue the opportunity? What made it attractive? What risks did we identify before we went through with the deal? And how did we structure that project to create value for our investors? So each episode is going to follow the exact same framework. One, we'll talk about the opportunity. We'll start with the property. Where was it? What did it look like? What was it compelling about it? What did it represent? Number two, the development strategy. We'll walk through our plan. What are we building? How did we design the project? What does the construction timeline look like? And then finally, and perhaps most importantly, the investment thesis. Why did this make financial sense for us and how did it make us money? Who is the opportunity designed for? What were the returns like and who were they positioned for? So, why is this important? Why are we talking about all these things? Well, visibility is the first reason. Real estate investing can sometimes feel like a bit of a black box, and investors often see, here's our design, here's the finished rendering, and this is what we're going to build, but they don't really quite understand how we got there. There's hundreds and hundreds of decisions that go into it before that point, and we want to bring you into that. Uh, we believe those decisions actually matter, so investors should understand not only what we're doing, but why we're doing it. And by sharing our process, our assumptions, and realistically, all the challenges we encounter all along the way, because we do encounter challenges in every single project, we hope to provide a more transparent look at what it takes to bring a development project from idea to reality. So, with all that, let's get started with this week's case study. When many people think development, they think build to sell, build and then just sell it on the market. But we really want to highlight build to rents because we like that direction in today's market. Today, we're going to put a spotlight on a development we did on Howard Street in downtown Durham, our first build to rent development. And one word that comes to mind with this project is simplicity. So, Devin, why don't we get started talking about just the overview, like what was it like and how did we identify it?
Yeah, this was relatively early on in our development experience. We had done a lot of fixed to rent. We were trying to grow our construction company. And we drive by basically this off-market land sign that many people probably could never see because it's a side street. Very few people actually going by it. And are like, okay, let's see what we can do here. Maybe we can build a warehouse for our construction company. Something like that. And we get into it and we're like, yeah, we can do that. Or learning a little bit more about what we can do here, we can do what we do to make money, which is build housing. And make that shift ultimately, and get this at a relatively good price, get good returns, and explore that situation just by being local and driving by a sign that nobody else could see.
Yeah. So high level, you saw the sign, and we'll talk just really, really high level about the rationale. So talk about what the price looked like, what the negotiations looked like, and why it was an appealing deal before we dive into more detail.
Yeah, the ask here was $80,000, and
For
right
what,
there,
half an acre of land, basically?
something like that. I mean,
Yeah.
the exact size isn't really important actually when you think about it, because when you have good zoning, you can get density. And so if you have a full acre, but you can only build one house on it, that's not as valuable as a half acre that you could build four houses on. Or in this case, that we could build, two duplexes and two small homes on. And I think it's less than half an acre on this lot, which is why the zoning plays in. It's very flexible zoning here. And also this is close to downtown. So ultimately, the most important part of your investment rationale should always be location, location, location. This is in a growing part of Durham. We like growing parts of Durham, which most of Durham is. Some areas are growing faster than others. We thought this was the high growth area. And so when you combine the price, the zoning on what we could do with the land and where the land actually was located, we were like, great, this is an incredible risk reward trade-off.
Yeah, I think that makes a lot of sense. I want to dive into the land itself just a little bit and kind of all the things we were able to do with it. So, I guess first and foremost, you drive by, you see this sign, and it's a commercially zoned lot. So, you're thinking, what? I guess we could build a warehouse. That's where you start. And then, how did you get from that to wanting to build houses?
Yeah, as you go down this street, like you see a lot of commercial, but across the street you see housing. And so you're like, okay, people are living here. This isn't traditional commercial. And we knew that the rules had changed a couple years prior that allowed for quick subdivisions where you could easily go from one lot to three lots. And ultimately, when you dive into what this actual specific zoning is, the CN zoning, it's commercial neighborhood. So it's meant for a mixed use community where you have housing, you have commercial, and people want to live there because they can, say, walk to their grocery store or walk to their restaurant, things of that nature that make it really desirable to live there.
Okay. So, I know there are a few different commercial zonings in every city really, but specifically in Durham, you have like the big commercial zoning where you can only build offices and things of that nature, right? But here we have, as you said, something that's commercial neighborhood zoning. Specifically, right, that's meant for walking from it's meant for integration, a neighborhood where there's a mart or a shop or something mixed along houses. And so houses and shops and things like that have to be all mixed into the CN zoning, right?
Yeah, and in the long term, the city wants a lot of these outside of downtown or just outside of downtown, call it like mixed use commercial hubs. I don't know exactly if you want to call it that, where you can bike around, walk around, things of that nature that are just really nice to live, all relatively close. And, you know, we talk about in some other podcasts about like the 15-minute city, things of that nature. And that's what this area is meant to be. It's not quite developed there yet. But in the long run, we believe that it's going to be that way. We've seen moves since we've bought the property, since we've developed it, that suggest that it's going in that direction.
Okay, so you have setting the stage for the 15-minute city because I really like that you brought that up, right? You have, as a whole, you have Durham and you have this robust downtown area where there's tons of shops, restaurants, all of that. But almost orbiting around that downtown area, you have, and I hate that I'm using this phrase, like pocket neighborhoods, right? Where you have little neighborhoods with little adjacent grocery stores and adjacent marts and adjacent places where you can buy like at a hardware store or something like that. Things that are downtown but not in downtown proper. So if you need something really quick or groceries or something like that, you can just get there within a couple minutes. But there's also still is that robust downtown area for, I guess, bigger events, right?
Yeah, this is just ease of your life, basically, sort of areas that we saw on this site as
Mhm.
having that. You know, nice little restaurants. There's a grocery store there. You don't have to go downtown. There are even events actually in the commercial area nearby where randomly like a little carnival is there, things of that nature, community events that we've seen nearby, like dance classes happening in
Mhm, mhm.
in neighboring parking lots, weird things like that.
They even have
Where
a fair there and stuff like that, right?
yeah, yeah. There's like one day, like just like down the street, you're like, oh, there's a Ferris wheel. Like that's interesting. Like there's something to do. You don't have to drive to get there, but you could just, you know, if you lived here, go walk to get your child on a Ferris wheel. If that's something you want to do.
I think the location here is super interesting, and that's kind of why I wanted to dive deep into it because I love going over there. That's one of my favorite grocery stores to shop at over there, the Super Compare Food. So very interesting. Let's move from talking about the visual land to the theoretical land. Let's talk a little bit about the survey and what you were able to do with this land, like very specifically and technically.
Yeah, so expanding housing choices in Durham had come out, which really helped specifically with the small lots and flag lots. And, you know, if you look at this survey, one thing we're able to do is get these two extra lots effectively called small lots where you can build up to a 1,200 square foot house. Today, we've actually even got some better designs for those 1,200 square feet where we do duplexes, get even more density that we find very palatable. But at the time, this was the optimal design. So we've got two giant duplexes and then two small homes that each have three bedrooms and function really, really well. And they all fit on what most people would drive by and think, okay, you should just build a quad there. But this is a much better use of the land that was allowed because of expanding housing choices and Ultimately, little pocket neighborhoods like this is part of the reason why the city of Durham expanded and did their simplifying code for affordable development years later to make building neighborhoods like this easier because they like these.
Yeah. So you were able to take what was like a commercially zone a commercial neighborhood, CN zoned, half acre lot, approximately just under half an acre. And you said instead of building commercial on it, we did kind of explore the commercial, but why don't we build residential? And when we build residential, the way you can build residential is similar to the most dense, residential zoning that there is in Durham. And so you took it, you were able to use flag lots and small lots by splitting it up into four, and then ultimately got 23 bedrooms across 6 units on four lots. And as you said, today we have designs that have duplexes on these small lots. So it could have even been 27 bedrooms or something like that, right? There could have been more bedrooms here, more density, and just more housing for people.
Yeah, and to be clear, like, just because it's more density doesn't mean, like, it's overdeveloped. I think just some of the rules changing, how our driveways need to be. Like, if you look at this survey, the driveway looks tiny on what these poles are for where we had to run utilities. So the city kinda said, "Oh, you know what? We only actually need 10 feet of space to run our utilities. So why are we requiring 20 feet for a driveway,
Mhm.
especially in a shared driveway situation?" So that would have narrowed it out, and we would have just had better designs that we can build today because of SCAD passing.
Yeah. And I think speaking to the overdevelopment, one thing that we always harp on, and when we talk about this is parking. So, yeah, you can't have 23 bedrooms in this small area without having places for people to park, right?
Yeah. Ultimately, what ended up happening here, maybe we overdid the parking a little, but the tenants don't seem to mind. They actually still have their outdoor spaces because of the way we built the decks. And there's space for cars because ultimately, unfortunately, sometimes you do have to drive places. You can't just do everything by walking. But I mean, we did. One of these units actually was rented out to refugees who did not have a car, and they were able to live there, get to work without a car, get to their grocery store, everything like that. Which is something you hear about for New York City, but this was something that these refugees were able to do in Durham, North Carolina.
Yeah. So to be very specific, the driveways here kind of go down the middle, right? And there's 20 feet and 20 feet, so it's essentially 40 feet of driveways, which, as Seven said, is very wide. But there's also parking along the sides of these driveways and a bunch of parking in the back, as you can see on the survey diagram. So, as Devin said, there's an abundance of parking here, potentially too much parking, but being able to fit all of these things there and having everything that the people need to live there adjacently, right? Like parking and also being close to these other things is what actually makes this a good development.
Yeah, and if you look at the aerial photos, people are like, "Oh, I don't want just this giant asphalt parking lot," things like that. I mean, first off, we went gravel here, so that's definitely not asphalt. But when you look at it, there's just like a really good mix in the aerial of like, this is green, this is wooded deck, and then here's the parking, and it doesn't look like a parking lot, even though that we got 23 parking spaces here,
Yeah.
which is something that's important when you're developing, and the rules in Durham allow you to do that.
Yeah. Yeah, that makes sense. So as always, when we talk about these things, the theory and how we're going to fit everything and how everything comes together is super interesting, right? It's like a puzzle, and you want to make sure that you're maximizing and really optimizing not only for the people that are going to live there in the city itself, but it also has to make financial sense. Right. We can't just build things for the purpose of building them and then just say, cool, thanks, have a good one. We need to make sure that we can fund this in a way that is beneficial for everybody. So let's talk finances, right? I think we started or mentioned earlier built to rents, and I know that this is a hot topic these days. Like I said, a lot of people like building and then just kind of flipping it because that's where the highest returns are. Why do we like built to rents?
Yeah, ultimately they're set it and forget it. And for us, the neighborhoods we're doing this in are usually C but improving neighborhoods, maybe B minus. They're improving, and we're getting a very good cost basis on our land.
Mhm.
Effectively getting the land for close to nothing. People are missing the opportunity to subdivide here and then build. And so ultimately, your total project cost is lower when your land is lower, and you don't necessarily see that spread difference on rent going from the C neighborhood to the A neighborhood like you would on a build for sale, where there might be a 50% increase on the house value going from C to A. The rents just don't shift in that exact same way. but the cost is the same to build that house.
Okay. Yeah. So when you're building, right, you're building in anywhere in Durham, right? Costs are generally about the same. I think there's a bit of a difference in quality when you're building to sell versus build to rent, which is what you're saying. But the difference in quality is not huge from a cost perspective. But in these C neighborhoods, you're getting the land for much cheaper, and the rent doesn't scale down in the same way that the sale price would scale down, right? So I guess, for example, like a three-bedroom, three-bath in a C neighborhood might rent for something like 1,600, 1,700, and then an A neighborhood might rent for 2,100, 2,200, which is not a huge difference. Whereas the house in the C neighborhood may sell for something like 340, 350, and then the A neighborhood could sell for almost 600,000, right? So I think when we look at where we want to build these built to rents, it's easy to pick a place where the land is cheaper. You can pare your costs down a little bit, and you're not losing much by renting them out in terms of the IRR.
Yeah, exactly. The build costs are like you mentioned are kind of the same, and the land is where you really can shift that, which I mean fundamentally goes into a tangent about how do we create more affordable housing. Really the lever you can pull if you're a government is the cost of the land, which they sort of have in Durham. That's how this neighborhood really was feasible. If you could only get 4 units here and build a quad, this wouldn't necessarily make financial sense.
Yeah. So we built two separate, I guess, types of units here, right? We built these three bed, three bath, 1,200 square foot small lots, right? And we built these like monster duplexes that each have over 2,000 square feet per side, right? Talk about the cost of building those and how they essentially kind of even out in the end.
Yeah, it's something that like we just tell people like stop asking me how much something costs per square foot
Mhm.
because it's such a dumb question, especially in Durham where you're going to spend 30 grand just to get your utility there on the water and sewer. Like, yeah, it goes way up when you're building just a single 1,200 square foot house. In this case, our cost per square foot on the small houses was $226, and our cost per square foot on the duplexes was 157. And so most people, their general thought when they hear something like that is like, why would I ever build the small lot house? And it comes down to, well, what is your actual income on your cost to build? Not necessarily what's your cost per square foot, because your square footage changes. And building a bedroom just costs way less than building another bathroom. So in this case, when we actually calculate it out, look at the rents we're getting. In this case, our 4-bed or our 5-bedroom units here, we're only getting 2,300 to 2,500 a month in rent. When the 3-bedroom houses, even though they were smaller, cost more per square foot to build, we're still getting $2,000 a month in rent.
Mhm.
And so when you even it out, it turns out they're the same roughly. We like to look at cost per rent dollar. It was a little bit over $11 is what we were getting here on in either scenario. So it sort of makes sense too if you think about it. Like, what are people willing to pay in this neighborhood? Like, it's kind of the same for the product when it comes out. And so, yeah, to that point, don't ever ask me how much something costs per square foot.
It's actually really funny, right? Because if you were going to do this again today, those small lots would probably be small lot duplexes. And so it would cost even more per square foot to build because you'd have
Yeah.
more systems that you have to run. This could be
Yeah.
somewhere in like the 250 per square foot to build, but your cost per dollar rent would be insane because you'd be getting so much more rent in that small space, right?
Yeah, we'd be getting 50% more rent.
Yeah. It's such an interesting topic when people ask about cost per square foot because they're kind of missing the boat on the like, well, what does that end up being in the end, right? Even when you are buying a house to live in, you're not like a 1,200 square foot house might be 500,000. That doesn't mean that 2,400 square foot is $1 million, right? It scales down. So it's kind of important to understand where those costs are going. I guess more generally though, right? Obviously this project is profitable from this perspective. Um, why, what is the bigger picture with built to rent here?
Yeah, I mean, it goes back to like what we were talking about with simplicity. When we look at something like this, and maybe the returns are lower on an IRR basis than build to sell, but there's some benefits with the ease. Once this thing is set up, it is set it and forget it. You
Mhm.
refinance, you can put in 30-year debt if you want and really never refinance. Like in this particular project, we don't have much vacancy. People renew because we built a good product that like it's nice. It's nice when something's brand new. And so that simplicity of we had a lot, we built some units, we rented it out, and we're just gonna hold this thing and get some tax benefits and cash flow a little and pay down our debt. we like those deals because
Yeah.
they're just easy.
Yeah. And in today's market, I mean, with prices kind of being a little bit volatile, we live in an area where we have 3 major research universities, right? There's tons of people who wanna come here and tons of students and especially graduate students who need more places to live. Like, rentals are kind of the future in the triangle, right?
Yeah, they're just much safer, and you smooth out any market dynamic movements. You smooth that out over 10 years, whereas, like, you're trying to fit this perfect 3 to 6 month period when you're
Mhm.
selling off a community where any given 3 to 6 month period, things could go crazy. I mean, the same thing is true at investing in the S&P. Like, you wanna just dollar cost average, when you're investing in the S&P, and you just throw money in every month. But if you are trying to move around and go in and out, it's much riskier doing that in the S&P, and real estate acts the same exact way. If you just set it and forget it, you build one of these communities a year, like, you'll dollar cost average into a good gain.
Yeah. So, I mean, let's talk high level. I know you mentioned earlier the aerial photo. Here's a really good opportunity to take a look at what this looks like at a high level. But also, we have some financials here, right? People want to know what the project financials look like. Before we dive into these financials, it's worth mentioning that again, this is a rental project, so not all of the gains can be appropriately captured here, especially when you're talking about like long term, like risk mitigation strategies, also tax benefits. A lot of those aren't here, but talk a little bit about the project and like the project metrics here.
Yeah, so ultimately our total cash in was a little bit over $200,000. Most of that is actually related to interest expense and these soft costs rather than everything else where we were able to finance it through debt. And at the end of the day, we just refinanced that exact debt, and had somebody else paying off that loan with a little bit of cash flow. And so we weren't able to just take out our 200,000 that we put in. However, on our balance sheet, we look really good. We almost tripled our equity here, and it's stable. It's levered 4 times too. So as rent increases over the next, call it 8 to 10 years, our returns will get juiced. And you briefly mentioned tax. Like, we're not paying tax on this. We're depreciating this asset. We can cost segregate to get depreciation early on, and if you do have a portfolio, something like that, if you are doing build for sale with it, you can take those losses over to your build for sale gains and be more efficient there too.
Yeah. And not to take away from build to sell, right? Like we love build to sell projects. We love building nice new modern housing. And we love putting them on the market because we think it really adds to the neighborhoods that we're building in. So we're certainly not saying don't participate in build to sell deals, right? But we are saying that build to rent gets a little bit of a negative rep because sometimes the IRR number that you're looking at the end of the day is just a little bit lower. And we're kind of on a warpath here to show you that build to rents can be a little bit more popular. So right now, why don't we talk a little bit about the build to rent projects we have in the pipeline?
Yeah, I mean, we've got a few. Two of them are, in Durham, in similar neighborhoods where we really like the long term prospect, and
Mhm.
we're able to effectively get land at super super cheap for free. And then one of them is super close to NC State, so incredible cash flow with the students. I literally didn't believe it when I started looking at the comps, that justify an incredible land value where our value add is basically demoing a house and getting permits, which is relatively easy. Like I said, we like simple. Um, all of these are relatively simple when you do build to rent. You don't have to do anything fancy. You just have to provide good housing. And so we're finding these opportunities in this market relatively, easily right now. For whatever reason, a lot of people are overlooking this and not. I don't think they're understanding the long term prospects, and they're putting on their short term lens, and they're saying, "I don't know what's up with this market." And it's like, yeah, that is true. We don't know where the market's going to be in a year, but I'm willing to bet in 10 years this market is up quite a bit. So why should I not be buying for 10-year investments? They might be right about the 1 year, but why don't we put our long term glasses on here and look at what things look like in 10 years? And these 3 projects we have going on are very well positioned for how the market's going to look in 10 years.
Yeah. I think it's really funny. We talk about this one that we're currently raising for over by NC State University. And We had been working with a senior at NC State, one of our analysts, and he came on full time after he graduated this May. But when we were analyzing this deal, we said, "Hey, man, like, what do you think about this?" He said, "Well, I pay 1,200 a month where I currently live, and I would honestly rather live in a place that we built here." And we were underwriting this at 1,000 a month per bed, like per bedroom in rent. So he comes to us, and we have boots on the ground saying, "Yeah, like I'm a student. I would love to live in this location. I would love to live in a nice new building with a couple of my friends and I'd be willing to pay this amount." It's just kind of a no-brainer because that's going to be the same year after year after year. And instead of saying, okay, yeah, a built to sell deal will earn me 23%, 25% IRR if the market goes the way we think it's going to go. What if the market doesn't go that way in 1 year? What if the market just has a softening, right? And exactly when you go to sell it, it's just down a couple percent. Your returns could potentially drop into the 14, 15% range where on these built to rent deals, we have people telling us like, I would pay this much in rent, which correlates exactly to the value of the building. And then we know that you're locking in 17%, 18% IRR for the next 10 years. It's really a no brainer.
Yeah. And there's some misconceptions about this too of having to deal with tenants and things of that. If you have new construction, you just generally get better tenants. That's just how it is. People treat things better when they're new. They understand it's new. Um, these tenants here, I mean, we literally have refugees who never lived in housing like this before. We haven't had issues. We have workforce housing, Section 8. And guess what? There are 6 units here. Upon the first renewal, 5 of them renewed. And then within a month, we had the 6th spot filled. So, that's to say, like, there are a lot of misconceptions about how build to rent works, and the
Mhm.
simplicity of it and the ease justify the lower returns substantially.
Yeah. So, as we mentioned, we have 3 projects in the works right now. One we are actively raising for. One we're just getting prepped for that, and then one we're was lagging a little bit behind that one in terms of time. That one will just be raising in a couple months. But you can find all of the projects we're raising for on our platform. We'll drop the link in the description below, so you can just click it and you can kind of explore all of the projects that we've raised for in the past, how we funded them, projects that we have upcoming, and projects that are active now. Also, please feel free to connect with us on social media. We're very active on LinkedIn, but also on Facebook and Instagram. We kind of post this stuff all the time. We do host in person events. We have an in person event every third Wednesday at our office. That's just kind of like a networking event, and then a quarterly event where we present on some of these development deals in the same way that we're presenting now, over coffee and pastries and just getting to know everybody who's interested in that kind of thing. So we do send out biweekly emails. So every other week we talk about market updates and what's going on, specifically where we analyze deals that have gone through in the past couple weeks in Raleigh and Durham, but also just the market from a more general standpoint, whether it's, our construction officer talking about construction materials and what that looks like in the face of uncertainty, or whether it's our broker in charge talking about the market. So please reach out via social media, come to one of our events, get on our listserv, like and subscribe below, and continue consuming our content because we hope to provide some information for you.
Yeah, reach out to us. We do actually, I mean, we love talking about this stuff. We're passionate about it. We will respond. We will talk about this. We think it's incredible what can be done here if you just have the right lens.
Yeah. Thanks again for listening, and we'll see you in the next one.